Good morning, traders and investors. It's Thursday, October 30th. Taking a look at the charts, equities are trading slightly lower. We got the NASDAQ down 0.25%. Most of the indices down about 0.2%. Taking a little bit of a breather. If we just pause here, you see the market has kind of stair-stepped its way higher. It's popped to some all-time highs. The S&P 500 taking another little pause above the 5-day moving average. If we take a look at the NASDAQ 100, you can see it's on similar price action, had a pop and pause, pop and pause, pop, and now it's pausing. Magnificent Seven doing a lot of the heavy lifting. Nvidia, Google yesterday helping hold the large cap, the NASDAQ higher. Today we are seeing money flow also out of the bond market a little bit, kind of fizzling out and working its way down. We mentioned this the other day that kind of everybody was kind of buying in, I think, into bonds, expecting a rate cut coming. And of course, usually it's kind of buy the rumor, kind of sell the news. It kind of fizzles back out after that. We saw that, in the past going forward. So overall, bonds do continue to channel their way higher. They are in an uptrend. They did dip into a short-term oversold territory. They're coming down to the lower end of their range. But again, in the grand scheme of things for bonds, we're still not, fully in a bull market phase. We zoom way out. It's still working itself through this big downward momentum and trying to neutralize and trying to turn higher here. If we take a look at the dollar index over the past two sessions, it's kind of dipped down into this lime green oversold territory on the 30-minute chart, which also happens to be right at the 20-day moving average. When we look at the daily chart and zoom in, you can see here it's trying to carve out this bottom, a double bottom. It's got a bull flag or pennant formation that looks like it's starting to break out. And we could see the dollar continue to extend and push higher going forward. Now, if the dollar goes up, it may put some pressure on gold. And we are seeing gold and silver down just a little bit, just a quarter of a percent this morning. Nothing significant. We have been seeing waves where the dollar and gold move up together and vice versa. So it's really a little kind of a crapshoot in terms of how they're going to react together. If we do take a look at the price of gold, it had this feeding frenzy. We hit this 100% measured move with our initial gold trade. It had a quick bout of selling there, and then we went into this even more feeding frenzy, the FOMO phase. And now, more or less, this 2-day wind out here was kind of the shakeout. And now there's just continued fear and worry in the space. So investors are slowly kind of moving aside, worrying it's going to go down. But typically when we have a very strong momentum move, we do get these sharp pullbacks and these resets. And I still see gold still being in a bullish environment. And this is kind of the first sharp hiccup just with kind of emotional traders who kind of are late to the game and then suddenly, take a bout of selling and they get scared, and it can create this kind of continued dragged out little bit of selling pressure for a while. And that's the feeling, went from everybody needing to be into gold right here to now I can actually sense people are very scared of gold and they're worried it's going to continue to go lower, which is a good thing because that usually means gold is working its way higher. It keeps having these, it looks like it's trying to find some support here. And that's really the same for silver and miners across the board. They're all in the same boat. It's everybody's just getting spooked, and that selling pressure is just kind of working its way through, dragging it down. There's a lot of people who piled into the space, and so a lot of those people are now on the emotional side of fear of losing money. There's a constant drip of selling pressure, and once they kind of dissipate and they're finished, I think we'll see this resolve to the upside. Now, if we were to look and compare back to 2008, 2007, 2008 kind of market top in equities and gold, you can see this blue box is kind of where I think we're at, where the stock market is trying to figure out, it's trying to put in a top. Gold is broken out of a big consolidation through here and extended higher. And maybe we're kind of somewhere along this phase here. Gold just had this consolidation. Whoops, let me just pull this back here. Gold just had a consolidation through here, and it's broken out, and it's had a big run up, and it's having this first kind of pullback and this hiccup with the equities. This pullback here, I think, could be very similar to this one. This is what I've been talking about for the past week or a couple of weeks, really, that we're just waiting to see how this unfolds, and that means we could see the precious metal space really start to move higher. And if the stock market does eventually sell off, we'll probably see money coming out of stocks, and it'll want to go to something that's going higher, and that money will flow into precious metal space. So that's kind of where we're at in the grand scheme of things. If we actually take a look at the seasonal chart of gold, typically we see gold pull back Eventually it finds a bottom here in November. So we're like, in 2 weeks or so, we see the gold space stabilize, work itself out, and then it can have a run going higher. And of course, this doesn't mean it's just going to go back to these highs. As long as there's an upward bias, if we're in a bullish phase, this upward bias can turn into that very strong parabolic move, another huge FOMO move to the upside in due time. So we do have, seasonality wise, it's kind of pulling on us a little bit. It does show that we should see a little bit of a bounce for 2 weeks, then see potentially a few days of selling in gold in mid-November, and then start to see it go higher, which kind of bodes with the chart price action that we have. If we look at gold here and just pull back, it's showing that we actually should have some type of bounce over the next 2 weeks, and then potentially it pulls back and consolidates a bit, and then boom, we go into a seasonality-wise a strong phase, and this could shoot higher and really take off again. So that's kind of what we're looking for. The long-term trend remains up for gold. Quick look over at Bitcoin. Again, it had a oversold bounce off of critical support, and it's quickly been sold back into. It's back down into those lows. Again, nothing too exciting here. It has been in a downtrend. It did give these red shaded bars telling us that it's overbought in a downtrend. This is usually when sellers start to step in and they'll sell it down, or people will sell into that pressure, lock in profits if they're in, or cut their exposure, try and get out on a bounce before it goes even lower. Again, Bitcoin not looking the strongest. If we look over at crude oil, it's down about 0.7%. It's trying to figure out what to do here. You could argue it's trying to form potentially a little bull flag before going higher, but if we kind of zoom in, you could also argue that this is it's had a news-driven bounce into resistance. It's had now a pullback, and now it's got a little bit of a pause here. This could very easily also be a mini bear flag, which will bring it right back down to where it was before there was news that drove oil higher, and that's probably likely what is to happen. If we take a quick look at the hot list and a couple of the sectors that are holding up very well, we've got the bots, which is the artificial intelligence, AI space. As the stock market has been, trying to figure out what it's to do, we've seen this pop up and have a pause. It's got a bull flag formation here. Looks like it does want to go higher. This is holding up near the highs. Also ITA, which is the aerospace and defense. Again, it's pushed up to some highs 2 days ago. It's having a bit of a pullback. Again, still looking very bullish. It's just the stock market needs to really have that next leg higher, and I think we could see this really take off. We've seen a lot of fear in the market in terms of most sectors have pulled back. If we look at the Russell 2000, I'll pull up the IWM. It's really just been trading sideways the past couple of weeks, just chopping around. And so a lot of sectors are kind of driven by what's going on with the small cap space. So a lot of aggressive traders were all piling into the precious metal space, and of course metals and miners, they've all pulled back, like the miners 20% or so. And a lot of those people are the same people who get into the sectors. So again, when they get scared, whether it's precious metals spooking them and shaking them out, they're going to liquidate positions, and that's why we're seeing, most sectors have had a fairly strong pullback, but those two are holding up very well and looking like they're ready to pop and continue to move higher going forward. Last but not least, we'll just take a quick look at the large dividend stock. You can see here that definitely been struggling. Long-term passive investors who move into the dividend space, really dividend stocks are nowhere near the highs, or they're down quite sharply from the highs last year, down about 10%. Well, the stock market's been going very much so in the opposite direction. In the last couple of days alone, we've seen the whole dividend space really kind of fall apart, down roughly about 3%, while the stock market has gone up 3%. So there's definitely some interesting money flows going on here, and people are kind of nervous and moving out of these defensive dividend paying plays and trying to figure out what to do. So anyways, the markets are very mixed right now. We're just let them work themselves out, and let our positions, we'll just manage our positions as we go forward. Anyways, that's it for now. Take care. Bye-bye.